Assalamualaikum warahmatullahi wabarakatuh. Now I'm going to explain to you on MFRS136, that is impairment of assets. So this MFRS is applied to PPE under FAR 320, which is PPE and intangible asset. Alright, the impairment here by the definition means that there is a diminution in value of an asset. Okay, there is a reduction in the value of asset due to several factors. For example, here there is an obsolescence or physical damage to the asset. For example, if you have a machine, okay, and the performance of the machine has dropped, it's normally the production of the machine per month is 6,000 units. But now you identified that the production is only 4,000 units. So you see that the performance of the machine has dropped. Therefore, you need to do an impairment test on the machine. Or probably the sales of the product has dropped because there is no demand from the customer. Therefore, now you are producing a product that cannot be sold. You also have to do an impairment test whether there is an impairment to the machine. Okay, probably your other seller or your competitor are producing a more advanced and recent, okay, following the recent trend, they are producing more demanding product in which they do not want to buy your product anymore. It means that the asset that you have now, the machine that you have now, must probably need to be replaced with a more advanced machine to produce a more quality product. So you have to do an impairment test whenever there is an indication that is on the reduction of revenue. Okay, if you still remember when you did your PPE, there are two recognition criteria that you need to fulfill. The first criteria is there is a probable future economic benefit flow into the entity. Okay, so if you look back at the recognition criteria of the PPE, okay, the first one, there is a probable future economic benefit flow into the entity. So whenever there is an indication that the revenue may be dropped, it says that probably the first recognition here need to be checked again whether there are still probable future economic benefit for the business. So you need to do an impairment test on the asset. So how are you going to do the impairment test? That is by looking at the recoverable amount and compare that with your with the carrying value of that asset. If the carrying amount, which is shown in your SOP, is more than the recoverable amount, therefore we say that there is an impairment loss. If there is an impairment loss, it means that you have to reduce your asset. You have to reduce the value of your asset to the recoverable amount. Okay, but what happens when the carrying amount is more than the recoverable amount? In that case, it shows that when your carrying amount is lesser, when the carrying amount is lesser than the recoverable amount, it means that there is no impairment. When there is no impairment, then you can still carry on using, maintain that asset at that carrying amount. Okay, it's only happen, the impairment loss only happen when the carrying amount is small. It means that what is shown in your book is more than the market. Okay, now this is the terms that you need to understand in order to compute the impairment loss. Alright, you need to compare the carrying amount and the recoverable amount. So carrying amount is basically the cost of your asset less. Okay, the cost of your asset less. Okay, this is carrying amount is basically cost less the accumulated depreciation. So you get carrying value. So this carrying value you compare with the recoverable amount. So what is recoverable amount? This is an amount which asset is higher. You take the higher of the fair value less cost to sell and value in use. So in order to get recoverable amount here, you compare fair value less cost to sell and value in use. So whichever two that is higher will become the recoverable amount. Okay, and what is fair value less cost to sell? Okay, now let's look here. Fair value less cost to sell is amount from sale of an asset less cost of disposal. Assuming that when you do the impairment test, you assume that, okay, now let's say today I want to sell this asset. Okay, what will be the selling price out there? And how much do I have to pay in order to sell this asset? So cost to sell could be the commission that you pay to the salesman, could be the advertising cost. So the net figure will be the fair value less cost to sell. And what is value in use? Value in use is assuming that if in this case you assume that you're going to pay and you're going to sell the asset. So value in use assuming that if let's say I don't want to sell the asset but I want to continue to use the asset. So how much is the cash flow that I can generate from the continued use of the asset? Let's say the useful life of the asset, let's say you still have 5 years. Okay, so along this time, how much is the cash flow that you will get by continue to use the asset? So you need to find the present value. Why the present value? Because you are here at present. When you identify the future cash flow for 5 years in the future, so you need to bring that value to present, which means that you discount that future cash flow. So we call it as present value. So we compare the fair value less cost to sell and the present value of the value in use. So whichever that is higher will become the recoverable amount. And this recoverable amount, if you compare with the carrying value, if the carrying value is small, okay, for example, okay, let's put here a fair value less cost to sell here is 1,000. Okay, here is 1,000, and value in use, for example, is 800. So which one is the highest? Of course, this one. This is the highest. Okay, so we take that RA is 1,000. Okay, so carrying value, let's say the carrying value is higher. We have to take it higher. Okay, because only when carrying value is more than RA, therefore there is an impairment loss of 500. That means you have overstated, actually. You have overstated your asset by 500. And therefore, you have to reduce this value from your account. Okay. So these are the assets that may be impaired. All right. All tangible assets carried at cost. Intangible assets, including the goodwill, and financial assets. Okay. Asset is impaired when its carrying amount is more than RA. If the carrying amount is lesser than RA, means that there is no impairment. So you can continue to carry the same amount to the next period. An entity needs to assess at each reporting date indication that an asset may be impaired. So normally for PPE, we do the impairment test when there is when there is an indication. When there is an indication of impairment. Okay, for intangible asset, that depends. For intangible asset, whether the IA has a finite life or infinite life. Finite life, that means it has a useful life. So, when it has a useful life, you amortize the intangible asset. So, in that case, you only do the impairment test when there is indication. If the IA has infinite life, therefore you don't amortize. When you don't amortize, that means you carry the same amount of IA from year to year. There is no reduction in value. For that case, you need to do an impairment test. Okay, impairment test is carried out at the end of every year. So that's the difference, because you do not reduce the value of IA. So we do not want our intangible asset to be overstated or unchecked. Therefore, we need to do the test at the end, carried out at the end of each year. Okay. So these are information. There are internal and external information that can indicate your asset may be impaired. So the external indication would be, the first one, an asset market value has declined. So the market value declines significantly. Okay, there is a significant changes in technology, especially when you are using a machine. Your machine, or maybe your business relates to the use of computer. So if there is an update, okay, there is a new machine out there in the market, and if the one that you have, the technology is the old one, so it indicates that there is an indication. Yeah, because if you don't have up-to-date machine, it means that you are not able to produce an up-to-date product that is in need by the market. Okay, and also because if there is some increase in market interest rate, so this is also an indication of impairment, or the carrying amount of the net asset is more than its market capitalization. So this is external indication. What about the internal source of information? These are information that comes within the company. There is an evidence of obsolescence or physical damage on the asset. Okay, obsolescence, outdated, physical damage, the machine can no longer be used. It does not produce product as expected or as expected by the management. So that is an indication of impairment. It means that the machine or the asset in general does not unable to be used to provide revenue for the business. Okay, the asset is part of restructuring, held for disposal, and there is evidence that the economic performance of the asset is worse than expected. This relates to when the sales drop. Okay, the sales drop. Okay, the sales drop is actually the external sources of information. All right, because it's the market itself outside the business. All right. So these are the indication of impairment. Make sure that you know this external and internal sources. You just pick the keyword so that you can remember. So this is example on how to calculate the impairment loss, if any. Okay, if let's say, okay, recoverable amount is defined as the higher or fair value less cost to sell. and its value in use. So let's say the carrying value is 14,000. The fair value less cost to sell is 13,000. So value in use 14,500. So from here, the higher is, because to get RA is you compare fair value less cost to sell and value in use. So higher will be 14,500. So that will become the RA. So is there any impairment? So you need to compare with the carrying value. Is the carrying value more than RA? Yes, carrying value is 14,000. But RA is 14,500. So this is not more than RA. Therefore, there is no impairment. No impairment loss. Okay? Okay, what happened when RA, okay, what is this? The RA is reduced to its RA. The reduction is an impairment loss. Okay, an impairment will be recognized immediately. Okay, let me check. 13,000, 14,500. So this is the higher. Okay, we take that, the higher, and we compare with the carrying amount. And the carrying amount is 14,000. So there is no impairment loss. Okay. So if there is an impairment loss, the carrying amount, the carrying value, carrying amount or carrying value is the same thing, should be more than RA. So if there is an impairment loss, okay, this impairment loss will be immediately recognized in, this is actually in SOPL. So meaning that the impairment loss is expense off. Okay, the impairment loss is expense off. So after impairment, the depreciation will be adjusted on a systematic basis over its remaining useful life. It means that when you want to calculate depreciation, it must be the carrying value now will be cost less accumulated depreciation and less the accumulated impairment loss. Okay, right. Okay, reversal is not covered in your syllabus. Okay, basically cash generating unit is also not covered, but I'll just explain here. Cash generating unit is the smallest identifiable group of assets that generate cash inflow that are largely independent of the cash inflow from other asset or group of assets. So for cash generating unit, they also need to do an impairment test. Example of cash generating unit is the smallest identifiable group. For example, you have what LRT station. Okay, so to go to the LRT station, there is a services provided. So the services adalah bus that pick up the customer kan, pick up the customer. So this bus is actually supporting the LRT station in generating revenue. So another example is, for example, you are doing a mining activity. Okay, so for mining activity, you need a railway to help for the collection and delivering the mine. So railway is also the cash generating unit in which it supports this activity. Okay, so this is not covered in your syllabus. Okay. Okay, the reversal of impairment loss is also not covered in your syllabus. So that's all for impairment. Thank you.